Hello, everyone, and welcome to another ACY Securities webinar. For those of you who might be new tonight, my name is Alistair Schultz, and I'm the Chief Market Analyst for ACY Securities. And tonight is really sort of focusing on all of you guys. We're going to be having a look at a few different charts that go through. I did put a video up a little bit earlier saying that I'd be talking about what's going on with Google, Facebook, and Australia. And we might even have a look at a little bit at their earnings results. And from there, we're going to have a look at a few other things with silver and potentially Ferrari as well. Of course, if you do have a chart that you would like me to have a look at, let me know. Put it in the Zoom webinar chat box function. Easiest way to find that is if you hit the More tab at the top of your screen, you'll be able to see a option drop-down bar that will say chat right underneath. Just open that one up and you'll be able to get in contact with me. Now, before we get started, I do have to go through a few different things just to get us off the bat. So the first thing is, for those of you who might be new and don't know who I am or haven't experienced one of my webinars before, my name, I already said my name, being Alistair Schultz, and I am the Chief Market Analyst for ACY Securities, but my history and background goes through investment funds. It also goes through trading floors, including some time spent on the floor of New York and as well in Singapore. So I've got a fair bit of trading experience over about 15 years, and I've also written a book about it all as well, which you are able to sort of check out online. Now, to move forward with it, the first thing to get through is this risk disclosure warning. Now, this statement here basically says that trading does carry a high level of risk, regardless of what asset class you really decide on. They all do carry a level of risk. But in CFDs and derivatives, you do carry with leverage, same as when you do with options. Now, even if you're investing in property or whatever market it might be in, you need to consider your investment objectives, your risk tolerance, and your trading experience. And tonight's information session is really just generalized. There is no personal advice because I don't know your own personal situation. So please bear that all in mind. Now, if you do have questions along this sort of line and you need to feel like you need to get a bit of extra help, then please reach out and obviously check out your network and see if you can find a financial planner or go along those sort of lines to get an idea on whether these sort of products are suitable for you. Now, to get that out of the way, the first thing we're going to sort of have a look at tonight, I've got some charts up here behind me already, or in front, not behind me, in front of me today. Now, I do want to have a look and just go through. Generally, I'll give a bit of an overview of what's gone on in financial markets so far in the sessions that we've seen today. Now, what we do have in store, I'm just going to put up a couple of different markets here on the indexes to give us a bit of an idea of what's been going on. So to get started with, we're going to have a look at the Nikkei. Now, the Nikkei has been traveling up for a little while already, but in the last 24 hours or so, it has started to bump itself back up. Now, you can see here, we've got the big green candles in our daily chart, which is what we like to see, generally speaking, if we are long in those sort of positions. We've also seen the same sort of situation happening out of the, whoops, I've got too many things opening up here. On the China stock side of things, they've also ticked up. Basically, Asian markets have sort of climbed throughout this session. We've also seen technology shares rising as well. And this is all ahead for US stocks on this side. We've seen them on the NASDAQ rising. We've seen the S&P 500 rising. We've even seen the ASX 200 rising, which is, here we go here. It's just one candle so far after what we've seen earlier in the week, last week, where we've had some bear movements going on. As you can see from the ASX, there's been sort of 3 or 4 sessions in a row that have negated in sort of negative sort of positions, or at least some losses overall on the ASX indexes. So what's really going on behind the scenes? Not a huge amount. Amazon and Google are due to be giving their earnings results tonight. So we haven't gotten that piece of data yet, but we're already seeing shares sort of starting to outperform. And so people are feeling that after we've had a bit of turmoil there last week, particularly with the idea of the Reddit sort of traders, we've seen them start to rebound today. Obviously, people are feeling a little bit more confident about what's going on this week. Obviously, GameStop has tumbled as well. I think that's down about 25% off the top of my head. And we've seen them sort of move more towards the silver side of things. Now, that doesn't necessarily mean that it's entirely driven by the social side of trading that we've gotten accustomed to in the last sort of 2 weeks or so that have gone on, but nonetheless, it has impacted on markets. So we've been seeing lots of messages through Twitter and a variety of other places where Silver is, even though it has retreated, we might even just have a quick look at silver to give you a bit of an idea when I can find my mouse. There we go. Now, what we've really seen along the whole way, where is XAG USD? There we go. It has bumped up, and that all happened very, very quickly. It's the highest price it's been for about 8 years. And if we actually look at this on a much longer time frame, so here's a monthly chart for us to get a bit of an idea on, and I might just zoom that in or zoom it out for us to have a look. It's not the highest price it's ever been. It certainly is within the realm of getting to that sort of monetary level, but there are a few things that sort of stand in the way. And right now, we're not sure 100% wholly if this sort of action that we've seen, this quick tick up, looks very much like it's social trading, and that is what the consensus is between analysts, that it has been coming from sort of the Reddit side of things. But from my own research, I found that that's actually sort of conflicting information with what's actually happening on the Reddit chats at the moment, because they have a person that has invested into a trust or an ETF that is the iShares Silver Trust from memory. And because that person is long in that position, they don't want to be giving him unnecessary wealth. And the guy is kind of like the boogeyman to them. So they have ultimately decided to sort of back away from that a little bit, which might be why we're seeing a little bit of a rest in price at the moment. Now, other sides of things that have been going on, we've seen a little bit of progress towards US stimulus. We're probably expecting to see a few more programs sort of coming out that way. But regardless, there's still probably some challenges to come along on it, even though I'm still quite positive on it, and equities in general. I think the near-term risk, there's going to be a little bit of volatility for us, which is nice. Traders love volatility. We all love volatility because volatility means movement. Now, giving all of this sort of in line with what's been going on, we do have earnings season this week as well. So we're going to have a look at a couple of calendars real quickly, just to get a bit of an idea on what is happening around the globe at the moment, what we might be looking out for in terms of news tonight. And then we can sort of have a look at the next stages beyond that. So first things first, I'll bring up a chart of Forex Factory for us to have a bit of a look at for our economic calendar related to FX. Now, here is our calendar that we've got running at the moment. I have adjusted the time from last week, so it does fit in with my local time zone now. And we are going to get a bit of an idea of what's happening. Now, I have covered some of these before. We've got, the Italian prelim GDP sort of figures, GDP price index. Now, I actually really like this one. Global Dairy Trade Index is very, very important for New Zealand. New Zealand does a lot of dairy trade in exports and imports, of course, mostly exports. So it's one of their premier sort of exporting things that they actually do sell overseas. So keeping in mind, it's not just milk, it's usually powdered products and cheeses and things that can handle sort of long-term sort of shipping side of things. But regardless, it does impact a fair amount on their actual GDP. Outside of that, we've had a few little things here that we've got going on vehicle sales. Not so much important for vehicle sales because we know that they are mostly likely going to be a little bit down compared to their normal ones. But we've also got a fair bit of other good stuff happening, and that the rest of it's really tomorrow. Today, however, there was this bad boy, the Rba Rate Statement that we saw. Now, this rate statement was a little bit unexpected. I actually had them pegged for, and quite a few others did as well, for no changes to the interest rate, which is what did happen. There wasn't any changes to the interest rate, but what we did see was that they decided to increase and extend the bond purchase program, the asset purchase program that we've been using to sort of combat a few different things. Now, this is problematic because effectively this is printing more money. Which then gives us a little bit more of an inkling into what might actually happen on the Aussie dollar. So when we actually look at the Aussie, you'll see the reaction straight away, and it will sort of stand out as to what it's actually done in today's session. It has ticked down just mildly on the monthly, but it's not enough to really warrant any too much concern. When we actually drop it down to the hourly, you can see that it's actually spent most of the day sort of sliding its way back down. Now, that's because we've increasing the amount of money supply that's available, and we are therefore decreasing the value of the currency. So it makes logical sense that the value of the currency would go down. Now, what do I think is going to happen next? I personally think that sometime this year, 2021, even though they've said that they're not going to be tapering anything, and they're not going to be increasing interest rates till much later into 2023, I believe, off the top of my head. I personally think that we'll probably end up seeing some tapering of that bond purchase program, and it will likely be quite aggressive because right now they're just continuously beating down the Aussie dollar. So whilst that does present a few different problems, there's really not enough evidence in the way to say that it's fair or warrantable to actually to increase or expand that program. We're being supported greatly by our commodities and exports at the moment. There are jobs starting to go up. In fact, there is something like 300 for every job that we had last year advertised during 2020 on LinkedIn and Seek and all those sort of things. There's now 2 or 3 times the amount. So that is a massive difference compared to where we were this time last year. And that was, really at the onset of the pandemic. We hadn't really been hit by it yet, and certainly hadn't had a lockdown by that stage. So all of these sort of things certainly address the situation that the lower you actually push the currency down, like we're seeing here, the more likely you are to start running into problems because the currency becomes too weak and our exports don't become as competitive. And naturally, we don't have anywhere near as much income. Now, to look at some of the other things that have gone on, I'm just going to get us a Google chart to happen here. I can't remember which one. There it is, symbols list. Google, NASDAQ. That's not right. There we are. Where is it? Hopefully it's in here. I'm missing my list on the left, which isn't seeming to be working right this second. Not that I've really looked hard for it this very second. It'll be in one of these top value shares, maybe. I wish they just put some simple names for these things. Definitely not in Chinese ADRs. Okay, so I will open that up. I might even just do it on my other one that I have that's available. It's a bit easier than this software. I don't use it all the time for this one. So when we look at what's going on with the elements of Google and what we've been talking about in the Antitrust Association, we have had a number of interesting sort of developments. Now, if you aren't aware of what's been sort of happening in Australia, or if you're not from Australia, it's been the Google, Facebook versus Australia situation has been quite interesting to follow. Effectively, it's kind of come into the spotlight this week because of what's been happening. Now, what's the crux of the situation is that there is a bill that is being passed here in Australia, and it is the News Media Bargaining Code. And effectively, this means that Netflix, companies like Google and Facebook will have to pay to have every time a link from a media agency, whether that be something like the Daily Telegraph or the Australian Financial Review or whatever it may be, anytime someone posts a link on Facebook, they have to pay a small clip as a royalty to the person. It's kind of like copyright law sort of side of things. Now, that's a very big figure. Now, estimates put that whilst we get these huge earnings from Google, which are in the billions of dollars per year, it doesn't actually give them any benefit, because in reality, Australia is a small market. They might make somewhere between 10 million and a couple of $100 million for the services that they provide here in Australia. So because of that, it's kind of not all that interesting for them to actually end up paying. And the media agencies here in Australia are seeking somewhere between 600 million and $1 billion each in some of the instances. So, that's obviously not going to work out for their revenue and their earnings over the long term. And so because of this, Google and Facebook have sort of made the threat to withdraw from their services from Australia. Now, if you think about how often we all use a Google or a Facebook service in our personal lives, it's every time we look for a restaurant, a doctor, or even a Netflix movie. It could be a variety of different things that we actually go and look for. It can incorporate things like WhatsApp and Instagram, as well as just the standard Facebook and Google sort of services we know and are aware of. It will also affect our marketing that we do here. So with the current sort of setting, Google and Facebook threatening to pull their services from Australia, it becomes a lose-lose situation for us here. If they're forced to pay those sort of media agencies, it leaves Australian citizens really as the people who are going to suffer from it. Even if it was hypothetically another sort of search provider or another social media platform that was available, then you'd end up in a situation where you'd have competition against one another. So you might use one search engine and only come up with XYZ links that they've actually paid a royalty to the media company for. So that would end up meaning you have to use 3 or 4 different search engines, which no one wants to do that either. So at the end of the day, Google can actually walk away. And in the scheme of things, it's actually a really, really big loss to us, not to them. And it's probably, if they do go with the deal, it's a bad gateway. And so from, an earnings perspective, not that big of an issue. If they sign the deal, then expect to see Apple and Alphabet sort of prices going down, Google and Facebook prices sort of going down. But at the end of the day, it's going to be affecting small and medium enterprises here in Australia who actually conduct, most of their business and trade through the usage of Google, whether it be for advertising, marketing, SEO sort of variations, or anything else in between. And it restricts them from the, sort of stops them from being able to sort of do domestic and international markets very effectively. They simply won't come up in search terms. So that's the argument that's really going on between Australia and Google at the moment. And Josh Frydenberg has been quite interested in holding a firm ground on it. Now, when we actually look at Google's performance over the last sort of year, they're seeing fantastic results. Honestly, for a company that is this established, this old, it is phenomenal that they are getting some of the returns that they have got. You can see here PE ratios of 36. I think if you do them the other way around, where you end up using measure of sales instead and their free flow cash, you end up with something like 290, I think, for off the top of my head. I can't remember if that was for these guys or if it was for Tesla, but regardless, they're still phenomenal numbers. And it's impressive to actually see that, a company that is so established and so big is generating these sort of numbers on a regular basis. Now, so far from what we've seen from Tim Cook in the earnings calls that have sort of already gone on for Apple in the very least, not for Alphabet, but for Apple, they're seeing double-digit in the billions of dollars returns on all of their products, all their product lines. So, again, I'm pretty bullish on most of these sort of tech companies. Numbers like this are just absolutely phenomenal for them to be doing on a regular basis. Now, where do I sort of think we should be sort of sitting with what's sort of happening in stocks in general? In Australia, the situation is, still maintain that bullish outlook, still look for long positions, and same as the US. But I think in the US market, there's a little bit more speculation on whether, on the SEC and all these things that are sort of happening from the other side of the fence, being the social and retail side of trading. So that is playing a little bit on some investors' minds. The sentiment is quite mixed at the moment from what I can see on trading volumes overall. And that does give us a little bit of an impact. So thinking about where we're going to go next on some of these charts, looking at the Aussie dollar here, I'm going to start with the Aussie dollar just because it is relevant to the RBA. And then we'll have a look at sort of the NASDAQ and obviously I'll go on to silver as the next bits after that. And we might, if we have time, I'll have a bit of a chat about about Ferrari, just because it's quite cool to talk about. So to get sort of off the bat, we'll have a look at the daily chart on Aussie. You can see how much uptrend has really been going over the last sort of year. And even if we go right out to our monthly charts and we sort of should mark up where we're thinking sort of our points of interest might be, I think the first ones I'm always interested in are these closest ones that are useful. So putting these two areas as our areas of trade, it's been sitting in that range pretty well for the last couple of years, bar the onset of the pandemic. So if we ignore the fact that this has happened for the time being, then we can sort of look at these two areas because this is outside the norm or outside of the standard deviation of where normal price range actually moves up and down and in between. Whereas where we've got this and this line sits pretty well close to where it would normally be adjusted to. So, this is sort of our range that we're going to be working in, I think, for probably for this year. If it does continue to rise, then that will, be problematic. But what we're hearing from the RBA is they're going to keep pushing the currency down and keeping it a little bit weaker in value. So, dropping us down to the daily chart, you can see when we're not all that far away from the bottom line. It is still reasonable distance for 743 pip, but we can also certainly sort of start putting on some lines. Personally, I don't mind this one going like that and then copying it across like so. Now, it's not a perfect fit, but it gives us another trend channel to sort of be trading and working in between. In fact, we can actually probably make sort of 2 or 3. You can put one sort of there on the bottom side, and now you've got sort of an area where if you see price breakout in between sort of these lines here and these lines here, then you can find actually a pretty reasonable excuse to look for an entry position. Now, right now, this sits quite comfortably looking to buy on the upside, looking for a long position. And even though we have had that sort of news today about the RBA, I'm still thinking that that's probably not sustainable unless they do an emergency cut or that bond purchase program interacts very, very quickly. Now, here again, 4-hour chart, same sort of deal. Of course, we are starting to go into the downtrend cycle on a 4-hour chart, but I'm maintained with the daily. For the time being, the short-term move is not as important to me as what it is finding another opportunity to actually get into a position. And right now, we know that the US dollar is remaining quite strong. In fact, it's had a fair bit of an uptick in the last couple of weeks when you look at a dollar index chart. So, that is going to keep beating us down a little bit as well. So if we do see that stimulus coming in from the US, expect to see the Aussie dollar start to loosen up and go up. So that's my general preference at the moment. I'm more focused on, we've heard about the RBA bit. We know what's coming out there. I think the next steps are to really start looking at the US side of this equation and sort of feeling out how long it's going to take for some of this stimulus package that Joe Biden is talking about to actually be released. So for me, that's what I'm waiting for at the moment. I am quite comfortable with the idea on these longer term timeframes to actually run a very small position with a reasonable size stop loss. But in this instance, if we were to look for a long position sort of now, then I'd be sort of trying to have one hang with a stop loss on the other side of this upgoing trend channel, because we know we've already got some support there. We know it's probably not a bad placement for that sort of stop loss, and then narrowing my focus down to the hourly or the 15-minute to look for a sort of a long position, perhaps off a pattern when we get a bit of price reaction around here. So moving us down to the 1-hour chart, we do get a little bit of a bounce out, but it is still well within the scope of things. The other factor to think about on this is it does sort of make a bit of our triangular sort of shape going on here. Now, I'm not one to really like that sort of triangle sort of pattern because I tend to be able to find them anywhere in price and don't always see the relevance of them, but they are sometimes useful. And when you've got a trend line like this that makes that sort of flag shape, then it does inherently make it a little bit more useful. So for the immediate interim period, I am looking to see if we can continue to push this up to about here. So we're looking for approximately 100 pip. We're going to run a stop loss probably of about 25 to 40 pips, and then I'm going to be looking for 100 on the take profit side. So you do get a reasonable entry position and plenty of sort of your risk reward ratios on that. 15-minute chart here, definitely sort of signaling a little bit more of a long position. Ideally, I want to see this current candle on the 15-minute close above this area here. I want it to close above that. Gives us a clear indication of a upwards move and suggests that we will likely end up seeing a further push up a bit higher, at least on the very short-term markets. 5-minute charts for us all. Again, I'm very, very happy with that. We've got the good close, provided we can get a nice wick out of this candle and then an immediate green one after. I would actually be quite comfortable taking a position. This here is also kind of an imperfect head and shoulders pattern. It's back to front. It's not the position. I'd rather have this wick a bit longer than this one, but that's okay. Sometimes they do play out. You just have to bear in mind that not every pattern is always going to look exactly the same. So in this instance, I am still feeling quite optimistic about the Aussie dollar sort of pushing itself back up. Now, moving on We might have a look at silver because I know I was going to talk about that earlier from when we were having a bit of a discussion at the office. So I'm just going to pull that up for you. XAG USD. Here we go. Now, silver has had a interesting day. This is just the 5 minutes. So I will zoom it out again. So we looked at this chart here. We know that we might not always look at it, but this is obviously an area where it's sitting right now, a significant area. The $27 to $30 range is somewhere where price quite often gets stuck. And then everything above that is very, very choppy. And you can see just how choppy it is. You get an immediate pump up, a pump down, a pump up, pump down, pump up, pump down. So this here isn't really even trend in my eyes, or anything in between. It's just so haggard. I mean, you could probably put a trend line like that over a couple of years, but it's not exactly useful to us today now. I think the best places to sort of be putting your stop losses, or sorry, not your stop losses, your areas of resistance and support would probably be like so. I'd also leave one on that south side there. And if price was to come back, I actually do think that silver, whilst a good store of value and probably undervalued as well, the extra damage that can potentially come from being on the wrong side of silver, particularly with the margin levels that they do have for them, could be a little bit concerning, particularly when we can't account for what happens with the Wall Street bet stuff. Now, there's a lot of news online about them wanting to, try and pump the value of this up. But then there's also that conflicting information I was talking about, where they're trying to stop the boogeyman from being able to get his profit out of it as well. So I'm not, whilst I want to trade it, I trade it conservatively. Immediately, that's my line from a monthly chart. On the daily charts, you got a gap here going on. Now, whenever you hear, I'm sure many of you have heard the idea that gaps get filled. I quite often find that they also don't get filled. So if they get filled, as often as they get filled, they don't get filled. And generally, that gap may end up being a push away from price instead, and that becomes your next level of barrier. In this instance, it looks like it's actually filled it, at least on a daily chart. And obviously the run down has pushed it back down to where it was trading, nigh over maybe a month ago now. So from there, I still think that there is still room for this to actually move up. Bearing in mind, we have this support line and this support line beneath us. We could very well be looking to put some positions in around this area, and obviously in and around this area if you want to go long. If you are keen on the short side things, do it on the short term. Gold and silver are both, asset classes that do get heavily used. Obviously, gold has got an astonishing value per ounce at the moment, but in silver's case, it's actually more of an industrial metal than most people would think. I like the idea of silver just because it is used in so many industrial applications. And so from that perspective, I've always preferred to trade silver over gold on quite a regular basis. So that does add to my interest in and why I would only choose to go with that sort of long position. Now, what are the chances that we actually do get something that is running off the idea of this Wall Street bet stuff and it flies up in price? Maybe. But at the end of the day, it's nothing like what we saw on GameStop last week. And the reason for that is that one of the reasons, at least anyway, is that the unity that they had on that particular trade in GME or GameStop is now, it seems like it's quite difficult to get them all to actually work together. That it's kind of like herding cats for them at the moment. They've got some people on AMC here and other people on Nokia over there, and then people are kind of split and mixed on the silver side of things. So, that sort of momentum, even on the GME stuff, is unsustainable, as we've already seen with the falls that it's had just in the last few days. And it really only takes one of the early adopters who have put large sums of money into it to pull out. The second question that might get raised on this sort of thing is, how do we know that there isn't actually some level of institutional play happening behind the scenes that have decided to try and trump up the social traders and pump the money in and try and sort of take out their short? So that sort of stuff does happen still. I mean, that's what a hedge fund sort of does. So
and that's why they were so upset that retail traders had actually done it. Now on it, even though even that's the case, it really is still controversial. I think the boogeyman guy that they're talking about is actually Citadel Advisors. If you want to have a look at that, they've got a whole heap of positions in the I Trust Silver, and they were looking to try and do a short squeeze. I don't think the short squeeze is really as applicable in silver as what it was in GameStop in very, very little sort of level. But this sort of trading that we are seeing highlights how emotional some of the social trading can get. And that does give a little bit of concern. So just because of where price is sitting now, it's dropped down. I'm not real interested in sort of looking at any positions on silver for the immediate moment. Ideally, once we get a little bit more happy sort of news about it, or that the retail traders back off. If they do back off, then you will find that it will come back down to its more normalized levels that we saw, perhaps halfway through the month in that sort of $25 range. But for now, I think it's probably logical to sort of sit this one out just because of how volatile it actually is, and because there's no fundamental reasons sitting behind it. The only things that you could really add to this as fundamental evidence that might actually improve the situation would be looking at what goes on with the lithium side of things and EVs that are building, because they require a huge amount of silver, aluminium, lithium, and a number of other things in between it to actually get the batteries made. And we're already seeing sort of, if this pushes up, it increases the cost on those solar panels and everything that goes into that. Lots of electronic sort of products end up costing a lot more money. So I would rather, if I see the price going up here, I would rather look at maybe some of those ESG stocks instead. Now, we'll have a look. I'll bring up Ferrari and have a bit of a chat about Ferrari. Just before I go on, does anyone have any questions or want to get me to look at a chart or anything like that? I'm quite happy to do that if need be. There's plenty of time at the moment for me to answer any questions. Probably got about 20 minutes, maybe a bit less, probably maybe 15 minutes sort of less before we sort of crack on. If you don't have a question, that's cool. I'll move on and start talking about the sort of next segment, and we can consider what's going on Ferrari, because it is always fun to look at Ferrari. Now, regardless of whether it's on the street or anywhere else. Now, what do I like about Ferrari? I'm sure some of you are already asking that in your own minds. Traditionally, when we look at Ferrari, they tend to beat earnings estimates on a regular basis. So they'll put the estimate out, and then generally the real result will come out, and it will almost always be better than expected. And that is always a pretty good sign when it actually comes to their sort of their business models as well. They're not bad business models that they actually use. So I am just going to bring it up. The ticker code, in case you guys are wondering, is RACE, which is also kind of cool. And I was quite excited to talk about it this morning, because being an analyst, you don't get to really talk about cars all that often. So that definitely brings me a little bit more excitement than you would usually think. So here we go. I've got my little widget up going on here now with Ferrari up. Now, their results are coming out tonight before the opening bell for the NYSE. Now, like I said before, traditionally they beat earnings estimates on a pretty regular basis, and they usually have slightly better outcomes than what they are. So, the EPS, for example, is always just a little bit better. You do get a little bit of a surprise coming up, and you can see here that they're pretty consistent. It's not a great chart just because it's so spread out on the screen, but I might be able to. No, I can't. It just makes me go up and down. So when we do look at it on the controversial, on the conservative side, I'm probably looking for. Here we are. There's our earnings. Now looking at the last sort of 2019, they actually had one of their best years, and they only sold 10,000 cars. 10,000 cars is the best year they've had in a single time. And the third quarter results in 2020 were really, really impressive. I've got those already for the third quarter, but they haven't been able to sort of update that on here. There's 2021, 21, Q4. There we go. Oh, it's not doing that right. That's weird. Total revenue, net income, total assets. No, that's not right. So, well, the EPS is, but that's okay. Now, when we actually look at it from you'll probably have to just take my word, because on this chart it's not lining up properly. On the conservative side, I'm wanting to see them sort of hit a 1.15 EPS, which would be nice. Currently, the actual is 1.07, at least from September when we looked at it last time. That was the third quarter. Now for the fourth quarter that we're going to be getting, the end of last year, I'm hoping for it to be a little bit higher. But the question is really, I'm sure many of you, is how many people are really buying Ferraris in 2020? Well, the answer is it doesn't really matter. They closed in the second quarter, they actually closed all of their factories. And so whilst they actually had a 6.5% reduction in the amount of cars they sold and exported, they increased their revenue by 6.8% just because they closed down. So when they actually hit the third quarter of 2020, they rose straight back to where they were in the first quarter and actually had a little bit of an improvement on it. Now, of course, because those shipments were down due to the pandemic side, but their earnings still rose. And I actually look at the leadership side of that as well. So when we do look at stocks, we do tend to look at what happens in the leadership side of things and sort of decide where it goes next. And even my little app here is telling us strong buy. So it is one that I do tend to like. Now, when we consider the pricing side and of course as a stock, the management side, or at least who's in charge, this is the only part. This is the caveat that does kind of bother me. One, during 2019, 2020, when he replaced the previous CEO, it was pretty good. He was conservative. He had estimates that by 2023 they'd have maybe 60% of all sales being a hybrid vehicle and not a full EV like we're seeing in Tesla. Now, whilst that's cool, and I know and I understand, that it's a Ferrari, you want it to sound good. In this instance, Ferrari's automotive culture has really struggled with the changing landscape that EVs are really presenting. Stricter regulations, particularly on the environmental side of things, are making it increasingly difficult for them to remain in the good stature. And I suppose the innovation side of things is something that Ferrari is known for. I mean, they haven't been able to win lots of F1s without it, or Le Mans. But December, that CEO that was quite conservative actually stepped down. So right now we have a temporary replacement. So right this very second, my immediate thoughts on Ferrari as a stock, as one you could potentially sort of add to your portfolio sort of thing, is quite good for a short-term, near-term sort of outlook, particularly with earnings results coming out tonight. But when I look at it for a much longer-term perspective, I would be hesitant to hold anything significant until I see who the new CEO is and kind of what their vision for the company is. And without either of those, that can lead us into a little bit of a struggle street, so to speak. Because if we don't have an idea of where they're planning on going next, naturally we know it's going to be down the EV or the electric sort of car side of things and still creating supercars. But in order to really compete with the likes of Tesla and some of the other companies that are out there, then they may have to find themselves being a little bit more innovative about how they actually generate electric cars. Because once you get an electric engine, you can put it in any car and it will still go fast. They just generate unbelievable amounts of torque and almost unlimited amounts of torque, really. So that does make a something for us all to think about. Now, tonight, just as a bit of an update, we've got Amazon. We've also got Alibaba, Google, Pfizer, ExxonMobil, and Electronic Arts also doing earnings season. Now, if you guys haven't actually seen an earnings season calendar before, there's not a bad one at this place called StockTwits. It is a bit of a mix. I don't mind using it for some things. There's also Whisper, which does similar sort of things. Now, I just might actually go back and do it properly. StockTwits earnings calendar. There we go. Now, when you go into this sort of thing, it'll give you the idea of what day, then how many stocks are actually reporting on the day. Tells you what the company name is, what the current price is, when it's reporting. And if you actually click on something, like on here, if you click on it, it'll give you an idea of where they're sort of going, what the sentiment is amongst the general community who are trading, and how many people are actually watching it through StockTwits. And then beneath that, you'll actually get some actual data and results, and of course, a whole stack of Twitter information underneath that. So, it's not the great. I've got it probably zoomed in a little bit too much for everyone. There we go. And so, yeah, you do get a whole heap of this stuff. I would ignore this stuff. That's all just directly from Twitter, but the sentiment sort of value of it is quite good. And it gives us a bit of an idea on where we might want to go. And of course, who else is out there? Now, when it does come to earnings season is always a bit of a crazy time of the year. Obviously, we have quite a few of them per year. It feels like they never end in my book, because by the time the last company finishes in one quarter, the next one's starting up to give earnings results for the next quarter after. So it kind of just feels like it always goes on, but I assure you it doesn't. So in where we think we might look at these sort of things, these are important for your sentiment style trades. If you feel like one of these companies has had a good year and you think it's going to be going in the right direction, obviously do some research on them, find out if you like the company even more when you look at their revenues. But then outside of that, these sort of areas, if you're a long-term trader, are really just a blip on the spectrum, unless you get some sort of crazy, loss or anything in between sort of happening. It doesn't matter too much. So that's really all I have for tonight. Now, if you do have questions, please feel free, let me know. You can get in contact with me via a number of different means. To sort of, if you do have any questions from tonight's webinar, perhaps from a video, then please do. I'll happily always answer your questions. Now, if you do want to get more access to some of our trading content or anything in between, then please feel free to jump on our website. We do have quite a few different areas you can go to. We have obviously where you can get more webinars. We also have where you can get the next lot of blogs and trade news. And of course, there's also the FinLogix platform, which will allow you to sort of have a look at some of the other traders that are around. And yeah, if you do have any questions, feel free to shoot me an email at talktoal@acy.com, and I'll quite happily respond whenever I can. All right, well, everyone, enjoy your evening. Good luck with your trading, and I look forward to seeing you all again on Thursday. Bye for now.